Okay, welcome to the second class of MLO mentoring. Okay, like I explained in the previous class, this is a mentoring class. I'm not give any certificate that qualify you to take an examination. So this is just mainly help you understand the material. Okay, and I'm the presenter, and this is pretty much sponsored by the Bất Động Sản Cali Facebook group. Okay, all right, let me forward this. So today is the second class. You probably received the email that I sent out, including all the days and time for the next several classes. Because it's only 5 chapters, and because I want to go slow and I want to explain more to you so that you understand the material, I may drag it out a little bit. It may take between 5 and 10 days. Okay, and next week, the week right after Christmas, I'm gonna skip that week because we'll take some vacation days, and then I'll come back on after the new year, and then we're gonna continue. If we need more time, then I'll send you more class sessions. Okay, like I said, I want to get you ready for the test. Okay, guess what? Welcome to the real estate landscape. Okay, you have heard that people buying homes, people try to get a loan, but you're probably not aware who actually get involved in the entire process. Okay, looking at this diagram, you would be amazed. Okay, why there's so many people, right? Buying has to be simple, right? But it's not, right? There's a lot of activities going on behind the scene. Okay, buying a home, okay, get involved not only between the buyers and the sellers. Okay, and it's also need like agents, real estate agents on both sides to support. Sometimes one person can represent both sides, but in this case, this diagram is the depicts like 2 separate agents. Okay, one agent helping the buyer side, and one agent helping the seller side. The agent himself or herself also have helpers. Okay, the little guy in the back, right? Could be like a team lead, could be a transaction coordinator, which is this little gal here. It could be like a broker, right? Because like when you first come, get involved in the real estate, you get your license, right? You go out and then you start finding the first customer, right? And then they say, hey, you a newbie, right? I'm not trusting you, right? Why would I? I'm rather looking for somebody that have more experience, right? You may feel a little bit uncomfortable when somebody is saying that, but don't be, right? You need to be confident, right? You need to learn smart ways of responding to those kind of questions, right? You need to stand up for yourself, and guess what? You need to get that transaction. You need to get that commission. Okay, so the smart answer to those questions is that, sir, don't worry. Okay, I know what I'm doing, right? If anything that I don't know, believe me, there are team members that supporting behind the scene. There are brokers who are really expert in the industry, help me, okay? And anything that I cannot answer, I will go to them and get the answer for you. But trust me, I will do a good job, and I will get you the home that you like. Not only that, right? I may get you, a better price. And not only that, I may get you, some credits back, from the sellers. Okay, but trust me, I can do it. Okay, and let my result, showing that I can. Okay, so if you're looking at this, right, you're gonna see that the agent, sometimes he works with the loan officer. Okay, on the left side here. Okay, and the agent, because like last time I told you, the realtor or the loan officer is mainly a salesperson, right? You can go out, you sell a home. You can go out, you sell a loan product. So you as a sales agent, okay, you're a salesperson. And then that meaning that if you just keep focusing, sharpen your skill in marketing, sales, and supporting the customers, then you're gonna do really well. Okay. And if you want to do paperwork, that's fine too. But guess what? Instead of spending time doing paperwork, why don't you spending time do marketing and go find more clients? That is your income, right? So that I'm telling you right now, right? You pass the test, you get your license, right? And then you're using that license and you go out, you find clients, you find transactions, okay? Instead of, you have to learn, okay, oh man, I don't know what I'm gonna do. How is this paperwork gonna, work? Okay, what kind of paperwork do I need? I don't know anything yet. I just get my license. But guess what? You have helpers, right? The team lead, your broker, okay, and your either transaction coordinator on on the real estate side, or you have a loan processor that helping you. Okay, so I'm going to explain this whole diagram here to you. Okay, so in the transaction of buying a home, right? You got to put in an offer. The agent is the one that gonna submit an offer letter, and then send over to the agent of the seller side. The seller, agent present that offer to the sellers. Okay, and then the seller pick the one that he think is the right one to sell the home to, right? Maybe because of the price, maybe because of the term. The term could be, a shorter term, and sometimes that they're willing to give up the inspection, willing to give up the appraisal of the home, appraise how much the home is worth, or even they giving up the loan contingency, meaning that they ready, they have the money and they want to buy. So the seller make the decision of who they want to sell the home to. What happened in a market, a buyer market, right? Seller having a hard time to sell, right? And then they just have to rely on the selling agent to go out and help them find the right buyer. Okay. So like I said, everybody has a role. We in the market right now that is kind of tend to be a seller market. A seller market meaning there are more buyers than the home available on the market. So meaning a lot of people willing to pay more. A lot of people will say, I need to buy the home and all that. Okay. So the seller have more advantages. Okay. In the buyer market, meaning there's a lot of sellers, a lot of home want to sell, but the buyer hesitate and they wait, or there are not a lot of buyers out there willing to buy, and they may scare, they may scare up, the recession. They may scare up the job market gonna go down. They scare the the interest rate is too high. So many different reasons. Okay, political, war, a lot of those facts contribute to the decision of if the buyer willing to buy, right? The market trend also got affected by more buyers, less seller, or more seller, less buyers. Okay, so the market gonna keep go up and down, and the cycle is like between sometimes 5 years, 10 years. The last crash was 2008, so now it's already 15 years. Okay, and there's no sign that it's gonna keep going down yet. It's keep going up. Okay, so in here you got both sides of agent, right? So when you do the
sorry, man. Yeah, sorry to interrupt.
Go ahead.
You're talking about the diagram on the fourth slide, right? That yeah, your screen is still on the first slide.
Oh, I'm so sorry. All right, let me see here. That's a good question, right? If you say something that you don't see, it's reflect, let me know. Okay, let me reshare this. Okay, let me share my whole screen. So you see this the slide now?
Yeah, we good. Yeah.
Oh, I'm so sorry. You need to tell me. Okay, so like I say, you see the both sides of the agents. I'll repeat this. You see the buyers on the left, the sellers family on the right, and there are people that help with notarize the paperwork, helping the escrow company, notarize the loan document, right? The loan officer prepare the loan document. The buyer gonna get notarize and sign. On the seller side, there's the notary guy, run around helping with the title transfer. Title is a document that say, okay, I'm the owner of this property, okay, and then I'm going to transfer that title to the new owner, which is the buyer, right? So there's a notary guy that's going to help on the seller side, okay. Each agent have a TC. TC on the bottom right, you're going to see a transaction coordinator. Transaction coordinator is the one that help, overlooking all the paperwork. Okay, so that helps take away the burden for the agents, so the agent can focus in on the sales instead of the paperwork. But there are documents that that agents need to pull it from the system, get it down, fill it out, send over to the TC. The TC send it out to the buyers or the sellers to sign. Okay, and the agent, sometimes they work with a loan officer. Okay, you may see a case that a buyer finding a loan officer first to get pre-approval. Pre-approval meaning that, okay, Mr. Loan Officer, can you look at my financial situation? You're looking at my asset, homes, car, saving, checking. Can you also looking at my my job, my income? Okay, and now tell me if I am qualified to buy a home of $500,000. If you think that my financial situation is good to buy a $500,000 home, give me a pre-approval letter. A pre-approval letter is a letter that the buyer agent can send to the seller agent to say this person is qualified to buy your home at $500,000, maybe with 20% down. Okay, so that's what it is. So the buy, so that is when a buyer file a loan officer first. What happened if the buyer go find an agent first, and then an agent can suggest the loan officer that he works in the past, okay, and say, hey, I know a good guy, do a really good job. He may find you a good program, right? That may meet the your term and condition, and who knows, he may get the best rate in the industry. Okay, talk to him first. So the agent, the real estate agent, the realtor, refer the buyer to the loan officer, okay, and let the loan officer help with the financial situation, and then get a pre-approval letter, and then put in with the offer, include with the offer, and send it over to the agent. So when you want to purchase a home, right, first you need to have enough money, you have enough credit, and you have to have enough income to support that. Okay, so I just mentioned about credit. Okay, credit, if you don't even know what that is that it's a credit score that is there's an algorithm that run based on your spending, based on your payments and all the debt that you have. It gives you a number. The higher the number, the better your score is. Okay, if your score is about 720, 740 and up, all the way to 850, the score may sometimes go higher than that, but 850 is a good number already. If you have over 800, you already in an outstanding, standing on the credit score. Okay, so with the credit score, it's gonna help you get a better rate, a good loan program, right, as a buyer, right? So try to build the credit score is one of the main things that if you want to buy a home. Okay, so the agent can refer the client to the loan officer, right? And the loan officer can work with the agent TC, transaction coordinator, right, to go through the whole transaction. When an offer get accepted, what they call is an escrow open. So meaning a transaction is open, and the escrow company help with facilitate all the paperwork, the transfer, the title, the money, and everything. Okay, and so that's what we call in escrow. In escrow, meaning that the offer got accepted and everybody start working together and try to bring the home to closure, like within the time frame. Sometimes 15 days, sometimes 21 days, or sometimes 30 days. And the role the loan officer get involved is really important, because the offers sometimes they have deadlines. Okay, let me quickly go over, what an offer deadline, are. Okay, the first one is that you have the home inspection. Okay, depending on the competition in the market, sometimes people lower the number of days to perform the home inspection, right? But normally everything have about 17 days. Okay, loan contingency, inspection contingency, or the appraisal contingency. The loan contingency is that you get a loan to buy the home. Inspection contingency is that an inspector going to come out and inspect the home, find any issue with the home. Okay, appraisal contingency is the bank, the lender, going to send an appraiser out to the home and then evaluate the home and see how much it's worth. Okay, using the data from the neighborhood, using the data from the past sales within certain mileage. Okay, half a mile. Okay, those three conditions, right, have a date on it. By default, it has 17 days, but it's negotiable. You can make it 20 days, you can make it 30 days, 45 days, however many days that you want. Sometimes if it's in a competitive market, the higher is the worst. Okay, so let's say if you have a loan contingency for 17 days, you have the inspection for 10 days, and you have the appraisal for 10 days. Okay, as a loan officer, you need to know all those 3 days, because if you don't, this whole transaction gonna crash. Okay, and everybody not gonna happy. Oh, and guess what? Everybody here, you see a lot of people get involved, but if the escrow, if the transaction it doesn't close, then nobody gets a dime. Okay, nobody get any money. So that's why everybody is trying really hard, right, to get this home closed, so that they get the commission, they get the payment, whatever. Okay. So talk about the money. Okay, the transaction coordinator usually charge about $200. Loan processor normally $500. Okay, just throw out a ballpark. Let's say if you're in California, let's pick San Diego. A home can be sold for $1 million. The agent each side can have on average 2.5% commission, meaning $25,000 each. Okay, so the agent more than willing to pay the transaction coordinator $300 when he can make $25,000. Okay, the loan officer can make between 1.5, sometimes one, let's say between 1 and 2%. Okay, so meaning that let's say but the thing is that the 1 and 2 to 2% is not on the purchase price. Okay, so the agent is actually on the purchase price. The loan officer, the 1-2%, is on the amount of loan. Okay, let's say if this person buying $1 million home, down 20%, down payment 20%, meaning that the buyer put in 20% of the money, $200,000, to buy $1 million home as a down payment. So the buyer gonna borrow $800,000. Okay, when the buyer borrow $800,000, meaning the loan officer gonna make between 1 and 2% of $800,000. Take a max 2%, and then the loan officer make $16,000. Okay, before paying to the broker, because some broker they take 20%, 20-80, 70, 70, 30-70, or 60-40, or 50-50. Okay, so the agent, the realtor, as well as the loan officer will pay some commission back, to the broker. Okay, and so that's saying the loan officer can make $16,000, but he may pay back 50% of that to the broker, pay $500 to the loan processor, right? And you bring back with decent money, at least more than $1,000. Okay, so like I say, if right now you don't have a job, you want to go find a job, you want to work in a restaurant, you want to work in as a technician, you want to work at the post office, do whatever you want to do. Okay, however you feel like it. But I'm teaching you a way, make a good money, and also an easy money. Okay, it's not actually really easy, but compared to many other occupation, right? You'd rather go and be a barista, fill me up, the Starbucks coffee, or you can stay home, and in a comfortable area that you can just do loan. Okay, and then you can go online and then you do your marketing and then you find more clients, or you're working with realtors, right? You're working with realtors and you get more referral from the realtors, and then you have those transactions. Okay, let's say a month that you close 1 or 2 transactions, you can easily make between 2 grand and 10 grand. Okay, if you do well, if you keep doing it good. But like I say, this money is good money, but you need to first put yourself out there, right? Do a really good job to help everybody, and also you have to build your network. Okay, you need to know more people. Everybody in this picture, you need to know all of them and more. Okay, so go back to the diagram here, right? I'm focusing on the loan officer right now. So the loan officer needs a loan processor to help with the paperwork. Okay, while he's supporting the client and talking to the realtor, right? Working with the transaction coordinator, working with the escrow officers. Okay, and then he may also need to talk to the account executive. Okay, who is account executive? Okay, account executive is a person represented by the lender. Okay, if you need a loan program, right? You talk to the account executive, say, okay, give me a quote. Okay, I need a $800,000 loan, 30-day close. Okay, what is the best rate that you have? What kind of program that you are? It's a conforming loan. Okay, conforming meaning that a loan that meet all the guidelines set by the Fannie Mae and Freddie Mac, and I will explain those entities later in the course. Okay, and then account executive, give me a loan that I can help my buyer, right, to be qualified to buy this home. So you have a really good connection with the account executive, right? This account executive is somebody represented by the lender. Let's say we have a Bank of America, right? The Bank of America may have many account executives under their belt, okay? And you can talk to one person, and then in the future that you help another client, you talk to that same person, right? So build your relationship with account executives so that sometimes they have a good product, good loan product, they will tell you, okay? And sometimes they can come into your office and train your officer too, your loan officer too, okay? So keep a good relationship with them. Okay, so a loan, when you open a loan, right, somebody needs to review the loan, review all the documents that your loan processor prepare for the buyers and then submit to the lender. And the one that's going to review that document and make the a green check mark, say, okay, this file is good. Or no, this file need to add some more conditions. Conditions meaning that, hey, you're missing some document, you're missing your employment, you're missing your paycheck, you're missing your bank statement. Okay, those are the conditions that this person, the reviewer, that looking for. And this reviewer is called underwriter. In this here, I put the S under the underwriters, okay? Because within the underwriter department, there may be many people working under that department. You may work with one underwriter, but that underwriter can give you a green light on several conditions, but there are harder conditions may need a senior underwriter to look at it and then give you a check mark and say, okay, it's okay, you fulfill this condition, so you're good. And sometimes it's so difficult that they may need the underwriter a leader or an underwriter manager, right? So the harder case that you have to keep passing up the chain, and they approve it, they're going to pass it out, and then once everything done, they give you, let's say if the file is clear, if the file is good to go, this person is qualified to get this loan, and then you're going to what is called a CTC. A CTC means a clear to close. Okay, clear to close meaning a green light that, okay, this file can get the loan document for the buyer to sign. Once the buyer sign it, it give back the document with the signatures. They review it one more time before they fund $800,000 to the escrow officer, to pay the seller, bank or the sellers. Okay, so look at that. Everybody here have its own role, and this is a great diagram that you should take a look at. And so probably right now you probably see that there are many functions, there are many things that everybody is working together to make it happen, right? Then you may say it's a lot of work. Yes, it is. Money is not easy to make, right? But like I just told you earlier, if you focus on yourself, and then you're gonna learn. Oh, you're gonna learn a lot from the loan processor. You're gonna learn a lot from the transaction coordinator. You're gonna learn a lot from your affiliates. Okay. So even if you're brand new, even if you're newbie, you come out to the market, don't worry. You should be, you should be fine. Okay. And the thing is that you focus on the sales, right? Don't focus on the paperwork. You will learn it eventually. As soon as you get the first transaction, you learn maybe 50% of it. You get the next, 5, 10 transaction, you may, get more familiar with the process, and then now you get more expert. Okay, and then you should be able to stand on your own, and then, you can just focus on sales, and then you're gonna do well. Okay. Before I move to the next one, anybody have any question? And is this diagram scare you at all? Anybody? Too much? Come on.
Yeah, going to the loan officer in the big bank like Bank of America or Chase, and as a borrower, is it always better to go to other loan officer outside to shop around? Yeah, and comparing to go to the loan officer in a big bank, which is the difference, and which one is better?
Okay. So like I mentioned earlier, depending on your financial situation or depending on the buyer's financial situation, okay, if the buyer make $200,000, have a credit score of 780, right, no debt, may have some may have a car that already paid off, right, and always pay down all the debt that he or she accumulate throughout the month. Okay, and because if you have that strong financial situation, and maybe you also banking with Chase, Bank of America, Wells Fargo, sometimes they give you some some better incentive if you go with them, right? So meaning the buyer can go to the bank, working with the loan officer from the bank, let's say from Bank of America, and this loan officer look at the history of this customer and say, oh, you've been with us for 10, 15 years, okay? You're in the platinum status. Oh, we may give you a quarter of a point discount. Oh, we may give you a 2/4 of a point discount or 50 points, okay? And then we can give you like 5.5% rate, okay? And sometime that some bank, if you have a loan, what they call is a high value loan or jumbo loan or super jumbo loan. Okay, what does it mean by high value loan? What does it mean by jumbo loan or super jumbo loan? Any loan that higher than I don't know, like San Diego, what is the maximum? Let's say I put out like a $750,000 loan. If that loan amount that greater than 750, less than $1 million, that call a jumbo loan. But if you buy a home that that need a loan for $1 million, $1,500,000, $2 million, then those loans is considered super jumbo. Okay. Sometimes if you take a higher loan, they may give you some discount too. The rate is the thing is that the higher the loan, they have to keep within the bank. They don't resell that to the second market. Okay, and I will go over what this mean by second market. Okay, so the higher the loan, they tend to keep their to themselves because they nobody buying higher loan. Okay, but the bank make a lot of money for higher loan as well, right? So they fund that loan, they they keep for themselves. So that's why they give a better rate. Okay. But nowadays, different buyer have different, scenario, different condition, different situations. So not always the bank is the best, best place to look for a good loan program. So they have to go out and they hire, or they working with a loan officer who working for a broker. A broker is somebody that's gonna go out and looking for many, many lenders, including banks. Okay. And then they're gonna look out, okay, who have the best loan product, who has the best loan rate. Then the broker gonna use that program, gonna use that lender, use that account executive, okay, to find that loan program for the buyers. Okay, so like I say, if the buyer has a strong financial situation, then you can go with the bank. If not, use the broker, use a loan officer with the brokers to go out and then find the best loan possible. Okay, good question. Anybody else? Okay, I'm going too much in this diagram, so take a look at this and keep refer to it. If you have more questions in the next few class, let me know. Okay, so of course, everything in the mortgage industry, in real estate, there are always laws. Okay, the laws that gonna help protect the clients, help protect the consumers. Okay, and why are these laws introduced like throughout the history? Okay, because of the civil rights, because of fairness, because of the housing discrimination, because of a lot of things, and because of the lawsuits and everything. So laws are keep introducing. Okay, and you may see a lot of laws here, right? In the test, you need to know what these laws are and what do they do. Okay, you may need to spend a whole week before taking a test, try to memorize all these laws. Okay, and then once you pass the test, majority of the time, you only refer it back when you need it. Okay, so eventually, I'm going to go over these laws with you, but at least take a quick pick at the these laws. Okay, and you may see quickly in here, everything is about the consumers. Everything is like, for example, the FHA, the Fair Housing Act, the Truth in Lending Act, National Flood Insurance Act, Fair Credit Reporting Act. So there are many, many, many laws here, right? So try to memorize it. Sometimes you not only know the law, you need also to know the acronym, the year that is introduced. And sometimes they refer by Regulation Z. What is the Regulation Z? It's Truth in Lending Act. What's Regulation Z? It's Stella. When was it introduced? 1968. Okay, what is the Regulation V? It's a Fair Credit Reporting Act. Okay, so you need to memorize all this. Okay, memorize for the test. You don't need to memorize it for practicing. Okay, or when you become a professional. Okay, so this I just want to give you a list of it. Okay, you can refer back to it. Okay, in the last class, I told you need to create an MLS account. I hope if you haven't done it, do it tonight. Okay, and I will be teaching you how to do that by just going to the link. Okay, do that. Okay, and what is the NMLS? NMLS is a nationwide multi-state licensing system. It's a system that got created right after the market crash in 2008. Okay, so because there was nothing that protecting the consumer, so people losing house, right? So they introduced this NMLS, I believe in 2010. Okay, and the website for it, for you to create the account and NMLS ID, is the nationwide licensing system.org. Okay, if you already have the NMLS ID, right, you can use that number to enroll in the MEC class. Okay, Mortgage Educator. I forgot what the C stands for. Okay, class. Okay, it's an online school, or you can take any other school if you like. Okay, you need that ID to to register for the class, because when you're done with that, you're gonna get a credit by the school using your NMLS ID and give you the credit for that, right? If you already have an MLO, Mortgage Loan Originator, and you have worked for a bank and transition to the state license system, you can use your assistant account and NMLS ID number. So meaning that, okay, if you create an NMLS, right, you're working as a loan officer under a broker, right? But now you decided you want to go work for a bank. Okay, when you work for a bank, you don't need a license. When you work for a bank, you don't need a license, meaning that you don't need an MLO license, but you do need an NMLS. Okay, so here's a case. Okay, Darren, this is for your mom. Okay, your mom doesn't have an NMLS license or an MLO license, but she worked for the bank. She worked for the bank. You need to go to the nationwide licensing system and register for an NMLS ID. Because you work for a financial institution that big, like banks, right? Because the bank have their own way of doing business, their own rule, their own guideline, and everything. So all the employees within the bank know how to do, right? And they follow the bank guidelines. So they really, don't need the MLO license, but they do need the NMLS ID number. Okay, keep that in mind. All right, each person can only use one NMLS number because it is registered with your social security number. Okay, your NMLS ID number is used by the NMLS regulatory agency to verify who you are, right? It is also used to determine who you work for. Okay, you can work for a bank, you can work for a broker. Okay, your NMLS number will follow you throughout your career until you don't want to do MLO anymore. Okay. Every contract, every loan that you have, your NMLS ID will be on it. So meaning in the future, if they come back and they audit that file and you on it, make sure you do everything right. Okay. It also indicates whether you are ever faced disciplinary action or complaint in your MLO profession. So if there is an unhappy client, right, they may report you, they may complain about your service, and they say that you don't do the right way, and you did something wrong, so they report you. Okay, so everything is about ethics, and this course have a chapter in ethics too. Okay, customer can also find out who you are, or they may search, okay, I heard about this person. I saw this NMLS ID. I want to know who he is, right? Did he get any disciplinary? Okay, did he do something wrong? So someone can go onto the NMLS website and then punch in your ID and find out who you are, right? So like I say, in your profession, make sure you don't make mistakes. Okay, otherwise that record will show when somebody look for you. Okay. The class score for exam, for the exam or any continuing education can be checked on using your NMLS ID too. Okay. When you take the required, education for the MLO, the class require that you need to watch all the videos, complete all the homework assignment, take the end of the class test. After each video, you have to click continue because they want to know that you actively study, not instead of just open up the video and then walk away. It doesn't work like that. Okay, the system of the school is make sure that you sit there and watch through these videos, take the quizzes, and then complete the chapters, and then take the chapter quiz, and then complete the course, and then take the course test. And once you pass, you get a certificate. Okay, and if you don't move, if you don't have any activity within 6 minutes, the system will lock you out, and you have to log back in. Okay, and you must watch the video for the time that to be counted for, because like 18 hours. How do they track your total hours by the length of the video, right? And then they record that. They add it up and they say, okay, you complete your 18 hours. Okay, for the test, there are 115 questions, but 5 of them are not scored. And the reason they put 5 questions in the test that not scored, because they want to learn your answers, and then they use that answer to create more tests for everybody else to use. Otherwise, if Mr. A take the test and he know what's on the test, he go back home and he tell Mr. B that, hey, this is what on the test, right? So they have a variety of different set of tests, right? So these 5 unscored questions will be used to generate new test file. And to pass, you need to correctly answer 88 questions, which is account for 75% of the entire 115 questions. Okay, and 75% is high, right? For the realtor, you need to pass 70%, but the realtor have more question. I think it's about 150 question, I believe. Okay, so you need to pass all that. 70% you pass, but for the loan, you need to pass 75%. And to get yourself ready for the test, you have to study between 20 and 60 hours. Okay, anybody have any question about this? Okay, the topics on the test, including the federal laws, the general knowledge about mortgage, the loan originator activities, ethics, and the uniform state content. Uniform state content is state-specific content. If you take for the California, so which is the 2 hours. Okay, the 2 hours class that you take, they will have some question for that, and that is within the number 5, USC, uniform state content. Okay, so the test will include some of that too. Okay, if you're in Texas, if you're in Florida, you take the test, the content here, the USC content here will be related to those states. Okay, a little history about the mortgage industry. Okay, throughout its history, the mortgage industry has played a crucial role in enabling individuals and families to achieve home ownership, while it's also experiencing a period of instability and reform to ensure the stability of the financial markets and also housing markets. Okay, so ancient origin, the concept of a mortgage has an origin dating back in civilizations such as Roman Empire. Woohoo! Wow, we go that far, huh? So in these societies, individuals could obtain loans by offering their land or property as collateral. Let's say if I want to borrow money, my collateral is my home, my land. Give me that money. I used to do business or whatever. So ancient origin is that where the mortgage industry was established, right? In medieval Europe, right, during the Middle Age in Europe, the mortgage industry began to take shape. Landowners could use their land as collateral for loans, and if they failed to repay, the lender would gain the ownership of the property or the land. Industrial Revolution in the 18th or 19th century brought significant changes to the mortgage industry. As urbanization increased, there was a growing need for financial to purchase homes, right, in the cities. Early 20th century, the mortgage industry in the United States underwent a substantial changes with the establishment of the FHA. Remember this, FHA is a Federal Housing Administration. This federal agency is helping to monitor and facilitate all the, throughout the whole mortgage industry, right? And also the Federal National Mortgage Association, which is the Fannie Mae, and there's a time frame for that too. Okay, Fannie Mae is an association, is a government agency that helps facilitate, offering and also buying loan products. Okay, this government-backed entity aims to make homeownership more accessible by providing insurance, liquidity to the mortgage market. So these, let's pick Fannie Mae for example, right? The banks. Okay, let's pick Bank of America, right? Bank of America may have like $2 billion on their book, right? But that $2 billion eventually gonna dry out if they lend it out to 1 million people, right? And each loan, $1 million, they can even get quicker, right? So the bank, once they lend it out, and the borrower gonna keep that loan for 30 years. How can the bank get more money, right? So the bank eventually have to sell those loans back to the for Fannie Mae, which is a government agency, to get more fund, to get more money to lend it back out. So what is that? How is that going to help the bank? Okay, the bank, when they offer you the loan, they also charge you the fees, a 1% fee, 2% fee. Okay, when they do that, they make money. So if they sell that loan back to the Fannie Mae agency, right? They only get their money back, but they'll keep the fee. Okay, and imagine if they have like 100, thousand of borrowers or million of borrowers, multiply that by 1 or 2%, it's a big number. So the bank make a lot of money by just turn over the liquidate these loans by selling to the secondary market involving Fannie Mae. Okay, they buy that loan back and they give the money to the bank lend it out to the borrower, and that cycle just keeps changing. Okay, so that is the early 20th century. The post-World War II. After the World War II, there were significantly boom in home ownership. And guess what? Who do we call them? Baby boomers, right? Baby boomers, right? Post-war, people go to war in World War II. They come home. Now they need a place. Now they need to job. They work, and now they need to borrow money to buy homes. So that, and guess what? We in the cycle of the baby boomers start letting go homes and maybe move into a smaller home, or maybe go to a nursing home, or maybe even pass away, right? So the baby boomers start getting really old now, right? They in the 70s, 80s, 90s right now. Okay, and that is a big market shift for the next 5 years. Okay, so meaning when they sell home, people are gonna buy homes. People buy homes, meaning they're gonna need to borrow money, and we coming in, we help them get the loan that they need to buy the buy the property. Okay, and also securitization is one of the things that help in crashing the real estate industry, right? Which is what I call is a mortgage-backed securities. Okay, so let's imagine, right? You got one borrower, borrow the money for this particular loan. Let's say loan A number 1. Okay, and that borrower, get the property and they live in it, and now there's a loan on it called loan A number 1, and then buyer number 2, buyer number 3, buyer number 4 get loan A2, A3, A4, all the way to A1000, A million. Okay, and then this bank, right? They build a new product they call securitization. They say, okay, now let me bundle 10,000 A's together, right? From A1 to A10,000 and make it a product, right? An MBS, let's say an MBS 1. Okay, and then they sell that MBS back to the an investor. It can be a Fannie Mae or can be a private investor, right? And back in 2008, because the A1, A2, and A2 10,000, right? Because it's easy to get the loan. They don't check for all the conditions that we nowadays do, right? They don't check for credit. They don't check for income. They don't check for debt, right? The A is supposed to be a good A, right? Maybe an A plus, but it's maybe a C, okay, or an F, right? And a lot of that get bundled into this MBS, right? And imagine that these are chunks, and then whenever the rate going up, these chunks start imploding, right? And then the whole market crash. That's what the MBS was, okay? And that's number 7, right? The housing market crisis, starting on 2007 to 2008, and eventually it's exploded by 2009 and 10. And then after 2010, the government step in, they create a lot of laws and acts and all that, and then eventually it's bottom at 2012. And then since then, it's like been going up like crazy. Okay, 2020, we got a pandemic hit, it's double the price. Okay, that I will go that more. Okay, so modern era, that's probably what I just explained it. Okay, and there are many different mortgages that you can take. You can have a fixed rate, you can have a variable rate, adjustable rate, right? And then you can have a loan that you only pay interest only for 3 years, 5 years, 7 years. And then after that, you have to pay interest plus the principal. Okay. All right. Before I go any further, anybody have any question? Quang Ho, are the question multiple choice or written or short answers? Okay, Quang. When you take a test, okay, they are all multiple choices. Okay. There may be 1 or 2 math, that they actually give you a calculator. Okay, just do that math. And in this class, I will teach you what those are. Okay, well, maybe you need to calculate the DTI. Okay, debt to income ratio. Okay, so even if you have the math, you have a calculator, your answer is a multiple choice. Okay, so that answer that. And the way that they form a question is that they give you, a scenario. Okay, sometimes they give you definition to that, and that, those questions are easy, right? Sometimes they give you a scenario, and they give you answers that really similar to one another. Okay, and that's where you make a mistake. So you first need to read the question carefully, and then read each answer carefully, and then pick the answer that best match. Okay, you don't read A, you say, oh, this is the right answer, then you mark it. Totally, you're gonna get it wrong. Okay, because like all the answers are look alike. Okay, so hopefully that answers your question.
Yep, thank you, An.
All right, so here, some timeline for the Banking Acts and regulations, significant from county to county, country to country. I don't want to say country here, but mostly county to county, and different states have a different additional rules and regulation. Okay, no, I just quickly want to go over the Federal Reserve was created back in 1913. Federal Reserve, who are they? Fed. Nowadays, when we talk about Fed raise interest rate, Fed lower interest rate, Fed pump the money, Fed pull the balance sheet and all that. Fed is a federal, reserve agency. Okay, and they was established back in 1913. So Federal Reserve System, including the Federal Charter for banks that permitted to make real estate loans. Okay. Let's see. 1932, the Federal Home Loan Act. 1933, the Banking Act. 1934, National Housing Act. That is when the Great Depression was. Okay. Millions of people lost jobs during that time. 1938, they want to resolve that. They created a Fannie Mae back then, which is called Federal National Mortgage Association, FNMA, or Fannie Mae. Keep this in mind, because nowadays we're using this agency a lot. Okay, after World War II, they introduced the Housing Urban Development, HUD. 1968, the Fannie Mae was privatized and become government-sponsored entity, meaning the government let it go and let an entity become a private, okay, but get a support and sponsored by the government, okay? And then they created Ginnie Mae. So we're gonna often in time, we're gonna here Fannie Mae, Ginnie Mae, Freddie Mac. Okay, Freddie Mac. I'm sorry. Okay, so Ginnie Mae was created to help with the mortgage for FHA loans. Okay, and then let me see here. I think the Ginnie Mae is for the government support loans. Okay, 1970 they introduced the Federal Home Loan Mortgage Corporation, Freddie Mac. Okay, they also have another one. That is for like for farmers. Okay, to get loans. Okay, and I don't see that in here. 2006, that's when the housing bubble peaked. 2007, 2008, pop, and then Great Recession between 2008, 2009, and then a lot of things happened. Because of the 2008, they introduced the Secure and Fair Enforcement Act, which is a SAFE Act. Okay, and then eventually we're gonna go dive into this act and see what are included in there. And then 2010, you probably heard. If you haven't, go online, go Google, and you're gonna see, search for Wall Street Reform Act or Dodd-Frank Act, which is the act that they say Wall Street are greedy. Okay, they, you remember the MBS, the market-backed security that I explained it to you earlier? Because back then, right, all the rating agency didn't do a good job. They didn't rate the buyers, right? And they didn't rate the loan. And then they just keep giving a bogus, rating, right? So they are greedy. They just want to make their profit, and they're causing the 2007, 2008 market crash. So Dodd-Frank Act come out and enforce that. Okay, so here in detail about this, some highlight of the some notable banking act, including the Banking Act of 1933, the Glass-Steagall Act. This act, separated commercial banking from the investment banking to prevent a conflict of interest. So they want to separate the commercial banking, meaning that businesses borrow money and and then do their business, right? And then some people want to use the money to invest, right? Or even the bank want to use that money to invest in stock, buy in lands and all that. So they want to separate that out. So that is the Banking Act for 1933. Bank Holding Company Act. This act regulates and govern acquisition of banks by the bank holding companies. Okay, so some act, providing regulation guideline on how to acquire banks. Okay, Federal Reserve Act, I already mentioned that earlier. Dodd-Frank Act, which is a Wall Street reform. Bank Secrecy Act. This act requires financial institutions to report certain transactions that detect and prevent money laundering. So right now, when you have a loan, okay, you have a buyer to borrow a loan, right? And the money that the buyer brings to the table need to be a clean money, okay, not the money that cannot be sourced. Okay, so you will hear a lot of things called sourcing. Okay, source the money, meaning that where is this money coming from? You may get that money from your income, your paycheck. You may get that money from your saving account that you transferred over. You may get that money from your mom and dad, your grandpa, grandma, and all that, but need to be sourceable. Okay, where is the money coming from? You need to tell me where it is. You cannot have $10,000 in there and don't know where the source is. Okay, so if the bank, the broker, the loan officer, knowing that there are money that, a big money, I think like maybe at least $5,000 or more, that you don't know the source and you may suspect that maybe money laundering, you have to file a report, okay, so that they can stop the, because the government scared that the money coming in, they may support, terrorists. Okay, so they have all these rules and regulations that you have to follow. Okay, Fair and Accurate Credit Transaction Act. Part of this act, the Fair Credit Reporting, regulate the collection and use of consumer credit information, meaning that when a broker or when a bank that running your credit, right? Make sure they have to share that information with you, and make sure they have to keep it, secret or confidential, and make sure that they don't share with somebody that you don't want them to share. Okay, so all these acts are helping the consumers. Okay, keep going. Community Reinvestment Act, okay, enabled in 1977. This act encouraged banks to meet the credit needs of the community in which they operate, including low and moderate income neighborhoods. Some banks, right, they pick and choose the community that they serve. And when they do that, meaning they redlining, you're gonna see a lot of this in the class as well as on the test. Redlining means when the bank pick and choose the community, right? They say, okay, Boston, Massachusetts, that downtown area is like really bad. I don't want to fund anybody in that, that community. I'll fund somewhere else. Okay, that means they redlining it, and the government, doesn't want that. If you fund everybody, you have to fund everybody in any community. Okay. Let's see, Graham-Leach-Bliley Act, okay, also known as Financial Services and Modernization Act. Let me see, financial privacy share non-public personal information. Okay, so this act is like sometimes that if you want to share the customer information, you have to get the acknowledgement, you have to get a signature, you have to have an agreement by the consumer. Okay, Truth in Saving Act, okay, or TISA. This act requires disclosure of term and condition of deposit account to help consumer make informed decision. Okay, Electronic Fund Transfer Act. Okay, so you can see that nowadays that we use a lot of electronic, banking, right? Electronic signature, right? So there, in order to do those kind of things, there need to be an act, there need to be a law, to tell what to do. Okay. Okay, just keep going. Financial Institution Reform, Recovery, and Enforcement Act. Okay, enabled in 1989, address various issues, including resolution of troubled financial institution. Okay, this is a bank-related act. Okay, so I just give you like a quick, couple acts, but eventually I'm gonna go deep dive into more acts. So if you look back into this, chart here, this is actually contained majority of the acts and law and rule that will be covered in the class, the course, as well as on the test. Okay, try to familiar with these acts, what they do, the name, the acronym, the year, and all that. Okay, but also don't overstudy when you take a test. Just know what that act is, and try to put it in your back of your mind when in the question, raise it up, bring it forward, and say, oh, what's that act? But majority of the time, these acts are protecting the consumers. Okay, so guess what? That's it for today. I'm sorry that I'm running a little bit over, because I think I explained the diagram a little bit long. Okay, anybody have any question for me?
Yeah, hi.
Interesting stuff, right? Uh-huh.
Yeah, I have one. I try to look up the time for how long for the test result good for, because I try to look up and it doesn't say specifically in California, but it's it's 5 years or just
Okay.
4 years.
Oh, let's take a look together. Okay, because I know it's there. Okay. Let's see, NMOS. Nope, that's MEC. So this MEC is a mortgage educator and compliance, the compliant part. I forgot that name. Okay, so let's take, guess what? Here's something that you all need to know and need to do. Okay, first, create your email account, either Google or Hotmail or Microsoft. Okay, secondly, bring yourself to the modern by register for a ChatGPT. Guess what? When you take a quiz, And if you don't know anything, you can just type in the ChatGPT. Okay, believe it or not, the material that I prepare, I get the help from ChatGPT a lot. Okay, and when you go out and then you start do marketing, you do sales and all that, heavily you're gonna require using AI, artificial intelligence. ChatGPT is a way that you ask a question, right, and then you get the answer. In the old days, we're using search engine that you type in a keyword, a phrase, and then Google gonna send back you like hundreds of results, and now you have to scroll through each one of them, pick the one that you like, and then collect the data from the from the result, and then you compile all that, and then make a summary, right? Guess what? ChatGPT does all that for you by just a simple question, a simple prompt. Okay, you type in a prompt, and then ChatGPT gonna pull all the information because it has billion of data, right? And then it's form a summary for you. Let's take a quick demo. How's that sound? Okay, Trung, what was your question? Let's ask ChatGPT.
Yeah, I tried it, but didn't get the answer. So how long is the NMLS exam good for?
Okay, now let's form that. Okay, so I'm gonna ask ChatGPT a question. Or because like the way that you ask also can refine the result. Okay. Okay, let's see what the ChatGPT tell us. As of my knowledge, update in January 2022, I'm not aware of any specific certification or test called MLO. Oh, I'm sorry. Including machine learning, mortgage loan originator. Okay, so it's direct me to something else. Okay, let me refine my question. Okay. Okay, so they also give you like a very generic. Okay, so they may not, they kind of rely on, okay, go to the NMLS and check it. Okay, let's do that. Okay, let's go to the NMLS website. Come on, yeah. Nation. Okay, so Trung is asking that if you pass the test, how long is that result last? I believe like at least 1 to 3 years. Right here. Let me see. Hopefully, this is maybe Ohio, I think. Okay. Prerequisites, requirement complete, uploaded, requirement now signed. Let's see if I can get anything from here. This is Ohio. Okay, the test expiration policy that the PE will expire 5 years after obtaining the credit. Okay, submitting a license application is not enough to prevent the expiration of the test result. Okay, so that is 5 years for the after you take the test in Ohio. Okay. Okay, let's see if California, we see California in here. Or I should say, yeah, this is okay. How about the state licensing, California? You see what I did? So I press on the state licensing, and I say state licensing requirements, multi-state MSB licensing agreement, common requirement, resource and support. Let's pick the state licensing requirements. Okay. Policy, financial, professional standard, mortgage report. Let me see anything on this side that can pop out. Mortgage call. Yeah, I don't think anything useful there. But let's click on California. So anything that you want to know about, each state, then just click on that map. Okay, let me pick this, California FPI, the FPI. Okay. Mortgage loan originator license, any person who originate residential mortgage loan origination license, new application, amendment, surrender. Let me see, new application. Okay, so this is CA, the FPI. Okay. Prerequisites. Let me see. Okay, you need to take 20 hours at least for the pre-license education, which is a PE, 2 hours for that. Testing. You must satisfy one of the following conditions, passing the result on both the national SIP test, okay, and so on. The fee, okay, so this is for you, for everybody, that if you take a test, this is what you're gonna pay, okay? The processing fee, $30. For the CA, California, the FPI, your application fee is $300. Okay, your credit report is $15. This is after you pass the test. Okay. FBI criminal check background, $36. Okay, I think the test is like cost you maybe $75 or $125, I forgot. Okay, but no, it shouldn't be that much. After you pass the test, then you have to apply, and that's how much it's cost to apply. Credit disclosure, company sponsorship, employment, legal document. Okay, Jung, let me find out, because I probably in the class I also have that in there too, in the material. But I'll look it up, and then I'll I privately, or I'll text to everybody. Okay, so like if you pass the test, how long that it's good for before you actually apply for a license. Okay, so I'll look for that. Okay, Jung.
Yeah, thank you.
Okay, actually, my son just gave me here the top paragraph. He say, so my son is in this class. The reason that I put my son in this class, because he is the senior high schooler right now, and he's gonna go to the college, and they say, hey, if you want to go to work at McDonald's, if you want to go work at Starbucks, you can work with me. get your license. I'm a realtor. I can pass my client to you, right? So instead of go flip burger, you can help me and get good money. So that's why I forced him and make him in my class. Okay. Yeah, actually, I don't see it here, Kevin. Oh, no, that's a renewal. Now, he's asking that if he passed the test, how long can he? No, how long is the result last before he have to retake the test? Okay, let me find out about that, and I'll send to everybody. But anyway, anybody have any question before we leave for today? I hope the class is informative and my explanation is clear enough for everyone. We good? Okay, if we're good, then I'll see you tomorrow. Okay, have a good night. Ciao.
Thank you, An. Have a good night.
Thank you.